Welcome back to Investing Talk podcast. We're the place that tries to cut through the noise and get straight to what really matters in all this complex information out there. Today, we're getting into something pretty fascinating, actually, the world of Nano labs. You shared some, well, quite a few recent reports, analyses on them, and their recent moves have definitely got people talking. It looks like a classic case almost of a company making a really dramatic strategic shift. So we're here to unpack it all, from their traditional business right through to this bold new direction in the crypto space.
It is quite striking, isn't it, how fast a company's whole narrative, its identity, can just pivot. We're looking at a semiconductor design firm.
Yeah.
Basically, they design chips. And suddenly they've announced this ambition to become, well, a potentially major player in the digital asset market. It really throws up some big questions, doesn't it? About risk, about opportunity, and even about how we define a tech company now in this kind of constantly changing landscape.
Absolutely. And before we really dive into the specifics of this quite incredible story, if you find these kinds of explorations valuable and you want to stay informed, please do remember to subscribe, maybe give us a like, and definitely leave a comment. Let us know what else you'd like us to look into. Your engagement, it really helps us out a lot. And, if you really appreciate the work we do, you could even consider buying us a coffee. That support keeps these sessions going. Okay, so let's unpack this Nano Labs situation. Before all the recent headlines about crypto, they were known as a fabless integrated circuit design company. Now, just quickly, fabless means they design the chips, but they don't actually make them themselves. They outsource the manufacturing. And their focus was on high-performance computing chips, some specifically for blockchain and Web3 applications, that whole decentralized internet idea. So what did things look like for them in that traditional line of business? How were they actually doing, financially speaking, before this big shift?
To really get why this pivot is so dramatic, it's important to see the context, the financial picture they were facing. Before these big announcements, Nanolabs was dealing with some pretty serious challenges in its main semiconductor business. The numbers show a really sharp drop in revenue. For 2024, revenue was CM 40.60 million. That's almost a 50% fall compared to the year before, a really significant decline. And they've also been consistently posting net losses. Okay, the losses did narrow a bit in 2024 compared to 2023, but still losses. So what this tells you is, well, this is a company that was struggling. Their earnings per share, looking at the trailing 12 months, was negative, minus 1.93, which basically means they were losing money per share, so a standard price to earnings ratio, or PE ratio. It just doesn't apply. You can't calculate it meaningfully for a loss-making company. And their debt-to-equity ratio, that was sitting around 83%. Now, for some types of companies, that might be okay, maybe moderate. But for a fabless semiconductor design firm, that's quite high. Usually their peers, similar companies, they tend to be more in the 30 to 50% range. So 83% signals a heavier reliance on debt.
Okay, so revenues shrinking significantly, consistent losses, and high debt for their sector. Sounds like they were already in a tough spot. Was it just the financials, though, or were they also finding it hard to stand out, to, carve out their own niche in a really competitive market?
That's a really key point, the competitive advantage aspect. Looking through the information, there's no clear sign of, say, unique patents or some kind of special proprietary tech that would give them a real sustainable edge, especially not against the huge players like NVIDIA or AMD. These smaller, fabless companies often struggle. They don't have the same clout with the manufacturing foundries, maybe can't attract the absolute top engineering talent needed for those breakthroughs. Their market cap, around $294 million, makes them a small fish in a very big pond dominated by giants. And looking at their stock price history, its volatility often seen driven more by sort of speculative buzz rather than solid performance in their main business. It was definitely an uphill climb.
Right, that paints a pretty challenging picture for their core operations. So knowing they were facing these difficulties, what did they decide to do? Because it sounds like they didn't just tweak things. They went for something completely radical. This is where the story takes a wild turn, isn't it?
It really does. Facing those shrinking revenues and intense competition, Nanolabs was clearly at a critical point. Many companies might have scaled back, maybe looked for a buyer, but Nanolabs, they chose a very different, almost startling path. On June 24th, 2025, they made this announcement. Well, a series of announcements that were so bold, they immediately got everyone's attention. What's really striking is just the sheer scale of what they're proposing. They revealed plans to raise $500 million. And how? Through interest-free convertible senior notes. These mature in just 360 days, which is very short term. And these notes are basically loans that can be converted into company stock later at a set price. Here it was $20 per share. That was almost double where the stock had closed the day before. So quite ambitious terms.
All $1 billion. in one specific cryptocurrency and aiming for up to a tenth of its total supply. That sounds less like a strategic investment and more like an enormous concentrated bet on something inherently volatile. What's the thinking there beyond just grabbing headlines?
That's the core of it. The fundraising was just step one. The big news was what they plan to do with that money, plus other private funding they mentioned. Their plan: acquire up to $1 billion worth of Binance Coin, BNB. And their long-term goal, stated quite clearly, is to hold somewhere between 5% and 10% of all the BNB currently circulating. It is undeniably a massive wager. The rationale seems to be about positioning themselves deeply within the crypto market's infrastructure, specifically tying themselves to a major exchange ecosystem like Binance. The idea might be to become a foundational player, maybe gain some influence, or open doors for future Web3 projects. But it wasn't only about BNB, that was just one part. They also announced they intend to apply for licenses in Hong Kong. Why? To operate stablecoin businesses, denominated in Hong Kong dollars and also offshore RMB. This fits into a wider strategy, it seems, to get into global financial infrastructure, maybe Web3 payment solutions. Stablecoins, of course, aim to hold a steady value against a regular currency, acting as a bridge between traditional money and crypto. Getting licensed suggests they want to play within the emerging regulatory rules. And remember, they'd already started moving this way earlier. They adopted Bitcoin as a primary reserve asset. By March 2025, they held about 400 Bitcoin, bought for roughly $40 million. So this whole package of announcements, it signals a very clear, very aggressive pivot. They're aiming to be right at the intersection of chips and digital asset management.
Okay, so a semiconductor company suddenly wants to raise $500 million, buy $1 billion of BNB, and launch stablecoins in Hong Kong. How on earth did the market react to that news? I mean, the ambition alone must have caused a stir.
The market reaction was immediate and quite dramatic, predictably so, perhaps. Nano Labs shares essentially doubled on the day of the announcement, June 24th. They were up about 100% during the day's trading, hit around $22 per share, which is their highest point in 2 years. Even before the main market opened, pre-market trading saw gains over 51%, and trading volume just exploded. Huge increase, which reflects pretty strong investor excitement. This was amplified, no doubt, by lots of chatter on social media platforms like X and Reddit. You often see this kind of reaction, don't you? When a traditional company makes a big move into the crypto space, it can trigger a lot of speculative buying, that sort of fear of missing out effect. Looking at the bigger picture, this move definitely sets Nano Labs apart. The potential upsides are significant, at least on paper. Becoming one of the largest holders of BNB, that could give them a major position in the crypto world, maybe influence within that ecosystem. It could open doors to partnerships, maybe even yield-generating opportunities related to BNB, and expanding into licensed stablecoins. That opens up completely new revenue streams, especially in Asia-Pacific markets where digital finance is growing fast.
Okay, those opportunities sound potentially huge. But given their track record in semiconductors, the struggles you mentioned, isn't there a massive risk they're just swapping one difficult business for an entirely different, maybe even riskier set of problems in crypto? Is this really a smart evolution, or could it just be, a desperate roll of the dice? What are the big red flags here? What should people be wary of?
That's absolutely the critical question, isn't it? The risks. This strategy brings enormous concentration risk. They're tying their fate, or a huge part of it, directly to the market value of BNB. Just think about it. Any major negative news about Binance, the exchange, or significant regulatory crackdowns targeting BNB specifically, that could hammer Nano Labs' balance sheet. If the crypto market tanks or if BNB faces specific issues, their core new asset could lose value dramatically. And regulatory uncertainty is still sky high everywhere for crypto, especially for companies holding massive amounts and for stablecoin operations. Rules in places like Hong Kong are still evolving. Changes could come fast and hit hard. On top of that, there's the funding itself, relying on $500 million in those convertible notes. That brings the risk of shareholder dilution. Remember, the conversion price is $20. If the stock stays above that, it's very likely those note holders will convert their debt into shares. That means issuing more stock, which spreads ownership thinner and can reduce the value for existing shareholders. So while the initial market reaction was excitement, you do see skepticism online. People questioning the long-term viability. Can a company that was struggling in chip design realistically pivot and become a successful, large-scale crypto investment fund and regulated stablecoin issuer just like that? Do they have the expertise, the infrastructure? Those are fair questions.
So what we're seeing is a company morphing almost completely from a struggling chip designer into this super aggressive crypto player. It feels like a massive gamble, huge potential rewards, Maybe, but also enormous dangers. What's the main takeaway for someone trying to make sense of this whole nanolabs transformation?
I think one really striking thing is just the total shift in the company's identity and, crucially, its risk profile. Nano Labs is making incredibly bold moves that could potentially position them as an innovator, right, where semiconductors meet digital assets. And they now have access to a lot of new capital, which frankly they seem to need badly. But, and it's a big but, the transparency around their original core business, the chip design part, is still somewhat limited. It's hard to gauge how healthy that is now amidst all this change. And obviously, the huge risk from planning to buy so much cryptocurrency, that demands extreme caution. If you compare them to other fabless semiconductor companies, Nanolabs is now an outlier, not just because of their past struggles, but because they've taken on a whole different universe of risks. Risks most traditional chip designers wouldn't go anywhere near.
It really does feel like two different companies crammed into one, doesn't it? One still dealing with the tough realities of the semiconductor industry, the other placing this massive bet on the highly unpredictable crypto market. So what does this all mean for you listening in?
Nanolabs is really a fascinating case study, a company undergoing a radical transformation, driven partly by necessity, it seems, but also by a very bold, maybe audacious vision. It's a company totally in flux, swapping the known challenges of chip design for the wild frontier of digital assets.
It definitely makes you think, doesn't it, about how quickly industries can collide and merge, and how companies might just completely redefine themselves trying to find growth, even if that means jumping into entirely new fields that are far less predictable. It's also a reminder, perhaps, that in today's market, sometimes a big, narrative-shifting story, even one loaded with risk, can capture investor imagination more than years of steady, traditional performance.
The big question hanging over all of this is pretty clear, I think. Can nanolabs actually pull this off? Can they navigate the incredibly complex world of crypto regulation, handle the volatility, maybe even keep their original tech business alive somehow? Or is this incredibly bold bet going to end up as a cautionary story for other companies tempted by radical reinvention? Well, thank you for joining us as we unpack the nanolabs situation. We hope this gave you a clearer, maybe more nuanced perspective on everything that's going on there. Until next time, keep exploring, keep learning, and definitely keep asking those important questions.